What's going on, people? I'm gonna hit you with a video today. Looking at several markets. But first, gonna start with gold and silver. It's been like a week since I posted a video. Unfortunately, the last video that I was gonna post was dealing with the 10-year note and the dollar. Um, it was another reason why I was kind of cautious getting back into, heavily into crypto. Um, but we're gonna look at gold and silver, and then I'll get into, you know, what I'm seeing on those charts. Uh, currently looking at silver. Um, this is the daily, but the daily chart, but this was the Wall Street bets potential short squeeze that got curtailed. Um, you sold off, but remember the first gold and silver video I posted. Let's look at the weekly. I said, let's go look at the monthly anymore on the screen. I said, if we stayed above this, this level around $26 and about like 20 cents, that, everything looked fine for silver. Um, and as you can see, you know, this is back in 2011. You had a lot of wicks off of this price. This was being used as support until you broke through, and you had the multi-year consolidation. You have your impulse up, you have more consolidation, and now, sorry, that, and now you're starting to break out of consolidation. Um, Go back to the weekly. You kind of just, you had a false breakout, tested the resistance, tested the resistance for a couple of weeks, and now you're starting off this week is looking pretty healthy. um you're starting to make positive momentum on MACD. RSI starting to trend up. Your Scotch RSI starting to trend up. I mean, silver looks honestly healthy. I don't have a major position, not yet, in silver, and I'm going to do that with the um ACQ, you know, position. This should have been like this, but this is again, you had the false breakout. Basically, we're just back testing. You had like a break, hook, and go type of pattern going on in this consolidation. Uh, it really silver and gold right now really look healthy as far as a long. There's only one caveat that has me worried about gold and silver. Let's look at gold, because I was really for the last week I was really entering positions in gold, like JNUG, and just gold on like a forex or my forex broker. You from this low to like this area here, this low here, you were making bullish divergence on the daily, and then you pretty much made the same level for the RSI. So you're basically like kind of, you can argue with like triple bullish divergence on the RSI, and your MACD was definitely showing, let me just hide that real quick, definitely showing that you're making higher, higher levels of momentum on a lower low, which is bullish divergence on your MACD, and your Scotch RSI is starting to trend up. It just, this is on a daily. It just looked like a potential, low risk area to entry. I started laddering in my longs around like 1778. I got another long at like 1769. It dipped again. And even on the 4 hour, there was like multiple time scales. You see, I had this That's why I have these plotted, your low and your lower low. And you had bullish divergence, so your low, your low low, and then you had was this another low? You had another low, so you had triple RSI bullish divergence, and you of course also had MACD bullish divergence. This is just showing that the sellers are exhausted, and that you could at the minimum have a potential rally. And so I've been long gold. Like I said, I've been laddering some longs in this range. You kind of were sideways moving, you were consolidating, broke out of the consolidation. Got to make a higher high, so you got to break above 1827, 1828, before I really start to get very more excited that we could potentially break this consolidation that we've been in for the last 6 months, the 3-day. Since August, you just been consolidating, and there's like channel, you draw like a wedge, until we break out of it, around like 1850, really start making higher highs in 1870. You're still in this just miniature downtrend. Really start breaking these peaks. Like you break 1950, I think we're going to see higher highs, going to test the highest high around 2040, around that area. And I just like target, I was showing other people what I was seeing. But gold right now, honestly, lay out these. Real quick. Gold right now is looking very like a low risk play, low risk entry. Still, even though we're up like 1% today, or 1.2% today, it still looks very, like there's a lot of more room left. The only thing that has me worried about, entering these positions, is the dollar, and it's still selling off today, so that's actually good. You were in this like wedge, and on like a smaller time frame, you were making like a inverse head and shoulders type of pattern, 4 hour, and you had a fake breakout, and now you're back in the pattern. You're just moving in a range, really. So I mean, that's good for position I'm in gold and silver right now. But this is what had me worried about crypto. When I was making these videos last few weeks, gold was still, the dollar was still trending up. And also, what else had me worried was, let's go to 10-year note. 10-year treasuries, the interest rates was rising. You're in this wedge. Scroll out more. You made your low in August, and you just been trending up in like this channel wedge. You kind of falsely broke out of it. Yes, well, last evening, you're breaking back into it. Why this is significant? If you continually have higher interest rates, what usually happens is people with risk assets, or that are in risky assets, start to sell, because this is signaling like well, this is potentially signaling that there's inflation coming, and so people want more interest. They want a better rate for buying U.S. debt, but as the interest rates rise, and if you had a dollar rising with it, it's basically signaling that the risk is off, and going long with speculative assets. This could still be the case, but right now we're getting a miniature sell-off right now, and you see it's affecting equity markets, and also it's affecting crypto at this moment. One of the plays I was doing to combat this was longing SQQ, which is a short play on the Qs. It's hard to really do technical analysis on this type of asset because it's really used mostly for like day trading. So like you might get bullish divergence and stuff like that on like multiple time scales, and it just has a little rally and flames out. Kind of like in this like channel, you see that we're kind of about to break out of it. So I've been, accumulating this position all this latest downtrend, and just waiting, to see if we were going to have any, issue with that 10-year and that dollar. The dollar, like I said, is still not rebounding, but right now, it seems like the market is taking at the very minimum, they're taking profit. I think the last video I posted about crypto, I was saying like the market was looking overheated, it was looking a little extended. And I saw the same with, equity markets. Look at the Qs real quick. Yeah, Qs are in this channel. You're breaking out bearishly today. You had like bearish divergence on the daily. You had a histogram, had lower histogram, selling off. You had impulse up high and a higher high, lower, amounts of RSI. So, we could just get a correction. I was expecting at least a correction, maybe 5 to 10%, before, I reevaluate and see if we're going to continue higher, or maybe we'll just range for a minute. But, with the 10-year rising the way it is, today, right now, it's selling off a little bit. And you are kind of making, if we do lose momentum, you are kind of making, bearish divergence on that. It's something to be aware of. It's definitely, stock market is going up for the past almost year. That's almost in a straight line. So let's look at the S&P real quick. Look at the regular S&P. Yeah, I don't know how to have this plotted here. But, you're really at elevated levels. Let me scroll out weekly. Just kind of hide this real quick. Let me hide this. Yeah, I mean, since the March low, you've just been basically not a straight line, but just more and more higher highs, higher lows. It's normal. Maybe you come back test. That's why I got this alert here. Come back test this area of support. It wouldn't be too shocking before you running up higher. But if you break this level, you break this high, then we're going to have a deeper correction. And, I'll reevaluate that, I will reevaluate any stock position you're in if we start to break these levels, because if you break, this level just has to hold that support. If you doesn't hold, your next support really is around 2305. I mean, you got these peaks here, but there's strong support is around in this area. If you break, but you're nowhere near it, so I wouldn't really be overly concerned. But you start breaking below it, you need to really evaluate, your positions. Like I said, the way I'm combating this, the way I'm hedging myself is, I'm holding SQQ. Hopefully, and I'm in a lot of the stock plays I was in, I kind of took profit. There was one play I was in that I'm still in a little bit, but the macro is starting to break down. So I'm took a lot of profit off the table and is holding a small position. Is sent. This is like a small market cap, but as you can see, you have like a large inverse head and shoulders that has developed potential. Could play out. That's a terrible drawing, but let me redraw that. And sorry about that. But you have your like your right shoulder there. But until you break this trend line, it's only just a potential. It's not confirmed as a inverse head and shoulders. Maybe get a sell off, go back to around 220, 210 area before you run. And as long as it holds up, above 156, you're still good. But I'm expecting for the next, probably a week or two, or maybe longer. Who knows? Maybe a couple of days. Who knows? But I'm just expecting, profit taking in the stock market. Like I said, it's just at highly elevated levels, and your VIX is starting to trend up as well. If your VIX, I have this plotted, like you just been ranging since July, and this range. If you break this range, I think you're going to get a massive correction in the stock market. So it's just these are some of the these are some of the things I look at when I'm evaluating the overall health of like the stock market and like gold and silver, because all of these, all of these assets are correlated. If you get, high, levels of volatility, you typically have a massive sell-off, and your indices, if your indices are selling off, your positions, your stocks are going to be selling off. And like I said, one way to combat that, one way to hedge yourself is with a leverage ETF like SQQQ, or if you want to short the financial sector, you can use FAS. There's also UVXY. You can hold, go to your ETFs. UVXY, which is like a long play on the VIX, I believe. Yeah. So there's just ways to, let me hide this. I haven't looked at this in a minute. These are ways to, basically hedge yourself against, downward pressure in the market. But, just getting back to the main topic, I was looking at gold and silver. And, it's just another way to hedge yourself when there's, volatility, uncertainty. Gold and silver just look like, as long as the dollar stays at the levels it is, it looks like a hedge against what's going on in the market. It looks like you have a low risk, still have low risk entries, even though you're not at the bottom low. I think, you start to break like 1850, 1860 area, you break this downward consolidation, and you break 1950, I think gold, it will perform better than a lot of assets right now. I've been seeing a lot of negative news around gold. People are expecting more downside. Usually when sentiment is like that, I'm kind of the contrarian trader. And so that is actually a positive sign for me, because people are just been, for the last 6 months, they've been looking at crypto go insane, but gold has just been, been boring. It's been just, making lower lows, lower highs. And, usually when you get that type of sentiment, you look at the chart, you start to see, your value areas. You start to see that the sellers are exhausted. So, it's not financial advice or anything like that, but, this is just some of the positions I'm in. You could lose all your money. So just be cautious, do your own due diligence. Um, there's some of the plays I'm looking at, like JNUG and ACQ, AG also is looking pretty good as a silver miner company. But you can just, inadvertently get that play with ACQ. Um, you know, I'm probably going to do a separate video on crypto, and it's, for the most part, it's been day trading. So I haven't really been posting any like type of setups because honestly, in crypto right now, there's not a lot of value. Um, and I know I've been looking at certain things with like fundamentally with certain companies investing in Bitcoin and how they're like raising capital. And I'll go into that in that video and why I'm like expecting, more so of a pullback in crypto for a while. And maybe it's now time for gold and silver. It's time to shine. Um, but hopefully you have taken profit and some of those plays that I posted. If you did enter them, or just any place you have been in with crypto. But until next video, peace.